which not only lists the rules of origin, but now has a tool within it which poses some questions that you can answer, which would help you determine whether or not your goods are originating and eligible for preference. And as I say, that's available on gov.uk. You can just type in the online tariff, and that will enable you to actually input the goods that you're looking to export, where you're exporting them to, and that will bring up all the relevant duties if you're importing. But as I say, there's also a tab there which will give you the rules of origin, and so you can find the rule quite easily, which you would then have to sort of work out whether or not your goods meet that rule or not. But as I say, there are a series of questions that you can answer that should help guide you through that.
That's great, Steve. Just to mention on that, I mean that's something that's evolved and developed over the last couple of years and is much improved on where it was, and that's a really worthwhile tool. My only advice is don't search in gov.uk, search in Google, and you'll find it much easier. HMRC tariff tools, and you'll find it easily if you haven't already. And then bookmark it, guys. Bookmark it. Thanks, Steve. Sorry.
Yeah. So Liam's totally right. Obviously, I have to raise gov.uk, but yes, other search engines will probably find what you're looking for a lot quicker. One of the main issues that we're finding with Origin, and certainly with regards to compliance, is that people really don't understand, because they don't understand the rules of origin, and specifically when it comes to trade with the EU, because for decades there had been this free movement of goods that are in free circulation in the EU and goods that are in free circulation in the UK now cannot be just exported and claim preference. So one of the things that you need to be aware of is, for example, if you import, if before the end of transition, if you imported something, say, from China, and you brought those goods into free circulation in the UK, then prior to the end of transition, if you had customers in the EU, you could simply move those goods across to the EU, and there would be no customs declaration. There would be no duty actually imposed, and the rules of origin simply didn't apply in that circumstance. The rules of origin would have applied to the goods when they came in to the UK, but there would have been no need for you to concern yourself with the rules of origin when moving the goods to the EU. And that's the fundamental change that has happened since the end of transition. If you import those goods from China into the UK and you bring them into free circulation and you do nothing further to them, so you do not process them to meet the rules of origin into another product to give it a UK originating status, then if you were to simply move those goods or export those goods to the EU, then you would not be able to claim preference on those goods, and they would have to pay duty. Your customer would have to pay duty on those goods when they are imported into the EU.
That's a really nice segue, actually, Steve, talking about that in terms of coming to Cillian and also Graeme at Kerry Foods, because they can now talk to some of those issues you've just mentioned and what they've done to deal with those challenges, Steve. So thanks for that setup. Really nice segue. So Cillian, Graeme, do you want to just start, because you're going to share some slides and tell us a little bit of a Kerry story, but then gets us to the action you've taken over the last 24 months to meet those compliance standards, and also where you found it challenging. So over to you, lads.
Yeah, sure. Thanks, Liam. I just share my screen. So thanks, Liam. Good morning, everyone. Cillian Quinn is my name. I work for Kerry Group. I look after our international trade function. and I will have my colleague Graeme Harry on with me today also. So what we're going to go through is kind of the journey we've been on since the implementation of the TCA, and how we've gotten to understand rules of origin and some of the efficiencies we've gained since the implementation. So I suppose a bit about Kerry and what Kerry are. We are a global food and manufacturing company, focusing on the production of food ingredients and flavors. Our kind of purpose and vision is to partner with customers every day to create healthier, tastier, and sustainable products that are consumed by people all over the world. And our vision is to inspire food and nourish life by putting food, drink, and well-being at the front and center. So that's kind of our vision and purpose. Within Kerry, we have an established international trade function. Some kind of key facts, really focusing on the UK, because we have a production footprint within the UK. We export product to about 68 countries worldwide. We import raw materials and finished goods from 44 countries worldwide. At the moment, we're currently utilising about 15 plus trade agreements that are in place with the UK. All of our rules of origin calculations are system-based. We decided to implement a system pre-implementation of TCA to support us with that, and we have a team in-house that run and manage all of those calculations on a day-to-day basis. As Liam said, our focus over the last 12 months has been really to try and target efficiencies and savings around the TCA following the implementation. And to allow us to get to that, it required, because we're such a large company and it's a global company, it required a large internal cross-functional integration piece of work with other work streams in our business and partners to try and seize those opportunities. So what I'm going to do is I'm going to hand you over to Graeme, and Graeme will kind of go through the detail on how we've understood the rules of origin and where we've kind of taken opportunities and some of the challenges we've had around that also. So thanks. Over to you, Graeme.
Okay, thanks, Cillian. Yep, good morning, everyone. Yep, as Cillian mentioned, the subsequent slides are going to try and cover really a whistle-top tour of our journey from the moment that the Trade and Cooperation Agreement was released, trying to digest it and understand it, right through to dealing with some of the initial challenges that it threw up. And then once we worked our way through those stages, obviously closer to present day, trying to use some of the rules of origin to our financial advantage. So before we get into the story, just a couple of slides to show the importance of international trade to Kerry. So this first one is Europe-based, and you can see obviously we have several green flags here denoting that we do have a free trade agreement, obviously, with the European Union. Now, international trade, both within Europe and the rest of the world, is essential for Kerry. So one of the key points here is that this is all about sales from GB into the countries flagged here. But we also have a requirement to transfer stock. We have a big manufacturing presence in Europe, so Spain, France, Poland, Germany, and so on. And we need to be able to move stock forwards and backwards in big volumes. And you can see some of the figures here, 55,000 plus tons of product. This is just sales from Great Britain into the EU, and actually excludes our stock transfers, which potentially even are on a bigger scale. So there's really no hiding place in that sense from cooperation agreement and free trade agreements internationally. Second slide actually is from a rest of world perspective. So the difference here between the green and the orange flags denote where we actually do have a free trade agreement in place versus the orange ones where we're still waiting with bated breath to get one. So we do trade a lot with the USA and with China, just as examples. So free trade agreements with those would be excellent news for us. But this just does detail the key point that we trade with Turkey, Australia, Jordan, and so on. You see a list down there in the bottom left-hand side. Volumes are large, so 10,000 plus tons of goods exported to non-EU countries. So therefore, there is a big window of opportunity for us to use these agreements to actually find some financial advantage, and it's one of the big tasks for me and my team over the last couple of years. I have to be honest, I did get my timing right, and I actually missed the first 6 months or so post Brexit and post the cooperation agreement being released. I was actually in a master data role then, so I kind of joined at the right time when a lot of the initial challenges had been tackled and dealt with already. So yeah, kudos to the people that did deal with them, but it wasn't entirely me. But this does tell the story of this slide, some of the initial challenges that we did face, and hopefully it'll be helpful in some way to see how we actually dealt with them. So to start at the top, the actual late release of the trading cooperation agreement, obviously it was Christmas Eve 2020, I believe. So, I mean, the lateness of the release and the short notice to actually dealing with it and it commencing meant some long hours for the team, and a lot of people putting a lot of effort to actually try and understand the rules, really reading a very long document and trying to digest what it meant for us and how we would need to deal with it. So going back to one of the things Stephen was saying earlier about kind of understanding free trade agreements, personally, having not really worked in the trade space prior to jumping into this role, and probably for a lot of people on the call, jargon is one of the big things to get your head around. Some of the terms, preferential origin, even at a basic level, wholly obtained, there's definitely others. You know, sufficient processing, all of these things, if you're an expert, they kind of roll off the tongue. But I find it reasonably hard to actually find, let's say, an idiot's guide to what some of this jargon meant. So if some of the panel do have kind of good sources where you can find what do these terms really mean to someone who's new to international trade. One of the things we found useful was to complete a course, which was actually provided by the UK Customs Academy, I believe. It was level 3 certificate in customs compliance. I'm sure other courses are available, but we found that one very helpful. Actually, part of it was to explain what some of this terminology meant. But outside of that, even through our friend Google, trying to find kind of one basic view on what do these terms mean for the uninitiated is quite tricky. Third point there, just the volume of documents we do need. So long-term supplier declarations and statements on origin. We have a high volume of suppliers, sometimes multiple suppliers per SKU. So the volume of documents we needed to procure as evidence that our finished goods that consume these raw materials are preferential is big. So to complete this, there was no way we were going to be able to complete it as a small team standing alone. So we actually enlisted the help of procurement within Kerry. So the system was really, we would analyze which documents do we need to obtain to make our finished products preferential. They would go away, use the buyers and their contacts with the suppliers to procure the documents, get them back over to us. We would validate them, sign them off, job done. So it really was cross-functional work. One of the other challenges was quite specific to Kerry. As many of you will have done, we have an internal system to manage international trade and trade preference specifically. I won't name a name, but we have one. So one of the requirements of that system was moving from an 8-digit to a 10-digit tariff code. Now, that could have been as simple, in many cases, as just tacking a 00 onto the end, which we could have done, and it would have been a fairly quick job. But we actually used this as an opportunity to have all of our tariff codes reviewed by our regulatory team, just for validity and correctness, because if, as you'll know, a lot of these rules of origin are revolving around tariff codes. So making sure that your tariffs are accurate and correct is key. So we really jumped on this opportunity to have a full review of our products and our materials tariff codes to make sure that we were really correct in what we were saying rule of origin wise. And then the final point is around the requirements for documentation. Again, going back to jargon, you have long-term suppliers declarations, statements of origin for multiple shipments of identical products, which I think a bit of a mouthful, but one of the other long-term documents you can get hold of, and also statements on invoices. And generally what we find is, at least within the food industry, there's quite a lot of confusion between our customers and suppliers on based on which flow your goods are taking, what do you actually need? What do you need to get hold of if you're asked to provide evidence that your finished goods are preferential? So we faced a lot of questions, especially from suppliers around this point. So what we actually did was create a mini cheat sheet, which is the next slide if you want to jump over to that, Cillian. So I won't go through this in any detail, but I do recommend having this to send out, and I can see there's a link being sent through as well, which could be something useful. But this was a cheat sheet that we created just to try and document, when questioned by our suppliers, what do we actually need from you? You know, one of the big questions was always, let's say a supplier in Britain was supplying goods to one of our manufacturer sites in Britain. Why do we need them to get to detail free trade agreement preference right across the world? Because from their perspective, they were just providing goods within country, obviously not realizing that our goods consume their materials and then can go out right across the world, as Kerry is such a global organization. So hopefully this document tried to kind of explain the need to really give us information on this whole list of free trade agreements. And a lot of you will be familiar with the list from long-term supplier declarations, the standard list of trade agreements that's in place. So again, once trade did commence again, post the trading cooperation agreement being released, we had a decision to make really on how we would claim preference for our finished goods. Two options really. First option would have been to claim preference where we were reasonably confident that we were correct in doing so, even though we didn't necessarily have documentation already to back it up. The second option, which is the one we went with, was to not claim preference unless we were sure we actually did have documentary evidence to ensure that if questioned, we could prove our preferential status for our products. And what that meant in practice is that we had to have kind of a mad scramble and a very big exercise, as detailed before, with procurement to actually get hold of all of the long-term supplier declarations and statements on invoices that we could, to ensure as soon as possible that we actually knew our products were preferential. So we commenced that late 2020, early 2021. So for a period of time across the year 2021, a certain amount of our products would have remained not preferential while we were pending document. They weren't non-preferential because we knew they were non-preferential, although that was the case in some products, but generally we were just pending documents. So we would have declared them as non-preferential until we had documents to guarantee otherwise. So it really was a business decision to go for compliance, really, rather than guesswork to an extent. So then the upshot of that was we did have a reclaim to make. So where we actually were able to source documents and confirm preference, we were actually able to submit a reclaim request into HMRC in 22 and get some money back, which is always good. So just going back to that approach, I guess this is one we would recommend anyway. From our perspective, it worked for us. So then the final slide is now moving on really more to present day, just looking at some of the ways that we've moved on now that we've hopefully understood rules of origin a bit more via the methods above and started to really understand how rules of origin and agreements work. Now we're really looking to make it work in our favour. So one of the big things we found to be useful is having a really good view data-wise of the duty that you're actually paying, to be able to analyse what to go after. Now, duties paid going to be anything from huge amounts, kind of tens of thousands, hundreds of thousands, even into very, very tiny amounts. So you really have to target, if you're looking for opportunities to make savings, where to really focus your energy, because you know, you don't want to be spending man hours to save kind of 50p essentially. So we find being able to pull data from our internal system and being able to manipulate it using mostly Excel, to be honest, from our perspective, having a really good view of this data is essential to really decide what to go after. And one of the big things I would point out is that sometimes for us, the amount of duty that we pay on raw material import is actually dwarfed by the amount of duty that we would pay if we used these non-preferential materials in our products and then had to export them back out to Europe. So whereas it's fairly easy to get a view of the duty that you're paying on import of raw materials, it's slightly harder to then work out, okay, these raw materials are not preferential, they're going into your finished goods. How much duty is that causing as a knock-on effect? So really getting your head around that as a big picture is essential, because you may find the duty volumes, which are kind of indirectly caused by these non-preferential raw materials, are really where the big bucks are and the ones that are worth going after. Because obviously we can't do everything at once. So within Kerry, again, cross-functional work is essential, kind of promoting an understanding of rules of origin, duties, and our liability across the business is essential. So obviously my team is based within supply chain, but we've had to enlist help from RD&A, procurement, especially the buyers, to help review our opportunities and really tell us where they think they could help us reduce this data. So we're really providing the visuals and the figures, they're providing us the know-how on how to do something about it. So the couple of ways we've managed to achieve savings, one of them through supply changes. So to give an example, if we have raw materials coming in from multiple suppliers mixed between preferential sources and non-preferential sources, can you move away from the non-preferential supply to stick with your preferential supply so that you can guarantee preference for your consuming finished goods? Another thing we've been looking at and having some success with is recipe amendments. So especially, I know we were talking earlier about threshold values within the rules of origin. So where you can see that the margins are fine and you can make a slight adjustment in your bill of materials to be able to achieve preference. Sometimes it can be achieved either by replacement of a material or by a slight amendment in the component quantities. With a reasonably minimum amount of work, you can actually achieve some fairly significant savings. So we've had big help from other functions, and it's definitely good to have a kind of a company-wide cross-functional understanding of why you're looking for the help that you're looking for, and the quick wins and the big wins that you can get for the company. We also are making some initial work into IPR. Now, I'm not going to go into the detail of what IPR means, inward processing relief. If anyone's interested, I'm sure someone else on the panel can probably explain it better than me. But it's one of the things we're looking at now that we're a bit more comfortable with tariff level savings and some of this reformulation. So IPR is another thing which for us has been worth digging into. And just a couple of our specific wins. Now, this is at a European level rather than out of Great Britain, but where we were able to get a big picture of the duties that we were liable for because of the status of our raw materials, we were actually able to make some fairly big reclaims from goods going from France into Switzerland, using the respective free trade agreement, but also from Italy to Mexico. So I think it's really good to look at very individual flows. So really look for which individual country flows are really costing me. So in our sense, I know these aren't GB relevant, but if you can really identify very specific flows, which are your big ticket items, it's good to focus in on those. Again, we can't tackle everything. So from our perspective, it's good to do it in bite-sized chunks. So these were two of the bites we decided to tackle. And obviously dealing with Swiss customs and with Italian authorities are kind of two challenges we had to take on. So these were quite big projects, but the financial wins were big for us.
Yeah, so where it's significant in that way, then it definitely is worth the effort to try and get that, as you say, the financial gain, but also that's about competitiveness, isn't it, Graeme?
Yeah.
And it makes a huge difference. Look, that's been terrific insight into the way that Kerry as a group have approached this, and clearly you're a group of significant size, and that you're giving the benefit to smaller businesses perhaps on the call about what your approach has been and how you've tackled it, and they'll get the benefit of that. knowledge. So thank you very much to both of you for that. I just want to remind those participants that there is a Q&A function at the top of the screen. Please, I can see that some people are now lodging questions and asking questions, and we'll come to as many of those as we can. And I'm going to pose those to my colleagues. Before we do that, though, I just want to do a quick snap poll. Heidi, my colleague, I'm sure is ready with that. So I want to ask you a question. Hopefully this is all going to work perfectly, and it's around the TCA, which Graeme has just been talking about, and your readiness for that. Heidi, are we ready to post the first poll? I see the first poll. Yeah, so we have it up on the screen now. So the question is, to what extent do you agree or disagree that your business is able to meet the requirements of the Trade Continuity Agreement, for example, in rules of origin, health certification and customs procedures? Do you strongly agree, somewhat disagree, strongly disagree, or don't know? Can you submit your answer now, and we'll give you 10 seconds to do that. If you can submit your answer to that now. It's completely anonymised, incidentally. The final results are shared, but not the detail behind them. So if you can click on that, that would be absolutely marvellous. It's on your screen now. We can see that the poll is building up with a significant number of people telling us that from over 100 respondents so far, that we've got almost 80% strongly or somewhat agree that you are able to meet the requirements of the TCA, 7% somewhat disagree, and 11% don't know. Well, out of 114 respondents, I think that is statistically valid and contrasts strongly with the last survey that we did on this, and the last time we asked this question at that time to 3,000 businesses across the UK in our international trade survey, and we had 49% strongly or somewhat agree that they could meet the requirements. So if you're a sample of the whole of the UK, then a lot of work has been done to improve the ability of people, or the knowledge that businesses have in meeting the requirements of the TCA. So that's absolutely fantastic. Great to see that, and I'm sure it gives our colleagues in HMRC and in DIT some confidence. Now, we do have a couple of questions, so I'm going to segue into you, Paul, with a question that's been posed by Kate on the chat, who says, can certificates of origin from local chambers of commerce serve as sufficient proof of origin, and can the Made in Britain mark serve the same purpose? Would the Made in Britain mark be enough? So in saying something about the experience of chambers, Paul, can you also respond to that question about the strength of a certificate of origin issued by a Chamber of Commerce versus simply putting Made in Britain, say, on an invoice declaration, or indeed providing an invoice declaration? Over to you, Paul. And by the way, speakers that have to come, the amount of time we have for Q&A is shortening, so I'm going to weave some questions into your time, if that's okay.
Good morning, everyone. Thank you, Liam. Yeah, so to get to the questions first, then no, just simply putting Made in Britain logo on your product does not make it British. As Steve alluded to, the preferential rules and the non-preferential rules are different. Therefore, because a product has a UK certificate of origin stating UK origin, it doesn't mean that it meets the preferential rules of origin. They are separate. The two don't really overlap. So it may well be British for non-preferential rules, and it may well be British for non-preferential rules, but you can't assume that. The other thing to make clear is the rules are actually different for each country. So when you go into the tariff, make sure you select which country the rules of origin you are checking, because actually the different trade agreements have slightly different rules. When checking the origin, but preferential origin, some people get carried away and think they have to prove the origin of every single item. As again, as Steve referenced, quite often there's a percentage rule. So actually, if you've got one part of your product that absolutely proves, meets that on its own, you don't have to worry about the origin of the other goods necessarily. So, don't waste time. looking at the origin of every single screw and bolt if you don't need to. If, you know, once you prove it meets the value rule, you don't have to worry about the other product. So, yeah, don't get carried away.
And there's also, sorry, Paul, there's also another question about, statements on invoices, which is kind of related from, I think it's Regina, Regina, who is saying, look, I get goods from Greece, from a supplier in Greece, and they state on the invoice that these goods have Greek origin, but also there may be other items they've bought from Greece that actually have Turkish origin. If the statement on the invoice says, well, these goods in the invoice are origin is Greece, and these goods, the origin is Turkey, can she rely on those statements in claiming preference when they arrive in the UK? So what would you say to Regina with regard to that?
Within reason, you can rely on those statements. Obviously, you can only go so far in checking. However, HMRC have been known to contact the Greek or the Turkish authorities and ask them to prove that the origin declared on those goods is as stated. There's a strange rule when it comes to customs: you're guilty till proven innocent. So you do have to kind of go that extra mile for the compliance and get as much background information as possible. HMRC are not going to necessarily give you a hard time because you relied on somebody else's statement, but if that statement proves to be wrong, then you are still liable for the duty. It doesn't, HMRC basically cannot go to Turkey and sue a company because they gave a false statement, so they're going to come after you. Because that's the way it goes, and I'm sure Steve would like to.
He would. He wants to come in and say something else because he's feeling maligned in some way. But so, Steve, what would you add to that?
No, I'm not feeling maligned at all. The only thing I would say is, I mean, if we're talking about goods that are being exported by a business that is based in the EU, in this particular instance, Greece, then the only thing that they could actually write an invoice declaration for is for the products that originated in Greece. If the goods originated in Turkey, then they cannot make out that invoice declaration for those goods.
Yeah, absolutely. Thanks for reinforcing that, Steve. I think that's absolutely valuable, and that was the point I was kind of trying to get to, and you helped Paul get there. And then the other thing that, of course, it would be remiss of me as a chamber person not to mention is that the standard of production of a certificate of origin from a Chamber of Commerce in Greece is consistent with the standards set internationally that we apply in the UK. So through the International Chambers of Commerce and issuing body states, and Greece is one of them, that operate to a high standard, also produce those certificates to the same standard of scrutiny where it's applied, and those certificates are available for verification on an international website at the ICC in Paris, something used by customs authorities the world over to verify the veracity of the statements made. And I think it would be reasonable to say that a certificate signed and stamped by a Chamber of Commerce carries a little bit more weight, perhaps, than simply a statement of origin made by a supplier, someone who is selling you goods and making claims, because typically the Chamber will have got into some scrutiny about the elements, the construction of making sure that the elements meet the trade agreement of the country of destination on behalf of the client. So you could ask your supplier in Greece to provide those statements and to get those non-preference origin certificates to back up your preference claim as well in some way, shape or form. Okay, Paul, anything you'd like to add about the experience of chambers in the more recent last couple of years in reference to preference statements and preference origin claims?
Hi, yeah, thanks again, Liam. Yeah, I mean, we operate across the entire UK. We've got a network of chambers that issue preferential and non-preferential certificates of origin. Interestingly, since the TCA and Brexit, we've seen a reduction in the amount of EUR1s issued. So that's the preferential claim. So obviously this is a subject that we need to rectify, and if we're going to trade globally, we need to be seeing those increasing, not decreasing. And I think it is confusion about the rules that stops people applying, and your chambers can help you with that. We are also seeing compliance issues starting to raise their heads. I think now the TCA has settled in, we're starting to see that customs authorities overseas are asking UK companies to prove the origin. So yeah, the compliance is getting to be an issue. And these things around, you know, how do I prove the origin? So there's things like importer's knowledge, where you try and prove you can claim preference based on the fact that you know the goods are of a particular origin. Accumulation is causing an issue, which Steve did touch on. But the example I would give is if you import, say, salmon from Norway into the UK, you've got a trade agreement, that's fine. You repackage it and sell it, then it's still Norwegian salmon. However, if you bring it in, you smoke it, and it becomes smoked salmon, all of a sudden that becomes of UK origin. So you do have to process the goods. And the other problem that crops up a lot is you import something from Germany and then you sell it back to France. Well, unless you've actually processed those goods in the UK, they won't qualify for preference. They're not UK origin. Even though it's going back to the EU, they don't qualify. And this is catching a lot of companies out. So do be aware of that. Just, you need to process it in the UK to claim accumulation.
Yeah, you do. And there's a question there from Robert asking if we buy salmon in the US and sell it onto the EU with a 50% markup and simply repackage it, can we claim this is UK origin? And I think to some degree, Paul, you've just answered that. And in fact, you answered it in the chat as well. Repackaging in and of itself does not constitute sufficient processing of goods. Okay, you know, my colleague Anne, I think, has just added something to that as well with regard to you know, Izzy. Sorry, I'll come back to that later. Look, in terms of the chat function, there's a number of links have been posted onto that function for you, not least from our colleagues in DIT. So if I turn to Anne Falcon-Paterson briefly, Anne, do you want to say something about those links? Because there's, you know, there are questions there about where to get a list of all the current FTAs. Recognising as well, incidentally, Graeme and Cillian, that you had Malaysia in there as a market, Australia as a market, Australia deal coming live soon, Malaysia as part of the CPTPP. So I just mentioned that to say that as new deals come forward, there are new opportunities available for businesses as well. So Anne, over to you. Do you want to say something about the signposting people to those resources?
Yeah, sure. Thank you very much, Liam. My name is Anne Falcon-Paterson. I work in the Export Support Service at DIT. Yeah, sure. I mean, any inquiry, I would suggest the first protocol would be to put an inquiry through to the Export Support Service, which I've just put a link into the chat now. They can hook you up to any relevant information or links that you need as far as FTA is concerned. But we can also put you through to advisors or other government departments as appropriate, depending on what the nature of the inquiry is. So I think the first protocol for UK exporters would be to put an inquiry through to the Export Support Service. I think my colleague Maria has just put something in the chat as well, which is a link to the information on FTAs as well. So yeah, have a look at that. We've also got a number, just quickly, about upskilling and training. We have a number of online training resources available from the Export Academy and great.gov.uk. So we're going to put that in a document for everyone, and we will send it on to the delegates from the webinar as soon as that's all put together and complete. But I would suggest your first protocol for any information from DIT would be the Export Support Service.
Yeah, it would be from DIT, and of course we would say from chambers also. Across the network of 53 chambers of commerce, we have people like Anne White, who's been responding on the chat as well, and many others who are very experienced in international trade and getting goods to market, in particular around those questions that, for example, Alex Crows has asked, what percentage of processing would we have to make it UK by would we need to do to make it UK by virtue of process? Well, that's a simple question with a very complex answer, because the short answer, Alex, is it depends. And that's where going to some resources like you will find in your chambers or the Export Support Service for very detailed response related to your business, your products, your processing, your inputs is what's required there. And that knowledge is available at chambers or from Chamber Customs or from the Export Support Service as well. We can certainly direct you to where you can find that advice for you. To our Kerry group colleagues, Yakut has asked a question saying this is great in FTAs. It's tricky in terms of not only FTAs and preferential origin, but also understanding DEFRA and food agency rules. Can you just say briefly something about, he finds it a bit challenging, they find it a bit challenging sometimes, but interested to hear your experience. Is that an area you go into? I suspect you're more customs than DEFRA.
No, look, Liam, look, it's a good question, and it's definitely something we find challenging also. Because we do import and export a lot of product of animal origin, so we have to meet DEFRA rules that are in place, and also since the implementation of the TCA, we have to meet EU rules that are in place when we're exporting goods into the EU. So we took this from a few different angles. Kind of, pre-Brexit, we took all of our products and defined what products were going to need specific SPS documentation for export into the UK, and there are certain documents that you require, like export health certificates, which are veterinary certificates on export. So we set up our system then to ensure when we were dispatching products, it would flag to us that we would need to have that documentation in place. On imports, when goods are coming, depending on the type of food product you're importing, there are various specific pieces and various documents that you require, depending on the country it's coming from. We do imports, raw materials from India, China that would need specific SPS documentation. Through the support of our customs broker, or UK customs broker, they would guide us on if documents were missing from our suppliers, and we would channel that communication then if something was missing. Generally, our suppliers, we've been working with for a long period of time and do understand the rules as well for import into the UK. What has also been very, very useful is DEFRA over the last 2 years, because of the implementation of the rules around SPS, have held some very, very good informative webinars just to understand the requirements when you would need documents on both export and import. And we are eagerly awaiting the implementation of the new target operating model for the UK border, which hopefully should be out at some stage this year, which will have elements of the SPS agreements that are part of that, of the new target operating model. So that's really, or at a high level, I suppose, kind of the experience we have had in it. Certainly it when Brexit was first implemented, moving product of animal origin was challenging and trying to get our heads around that. But thankfully, it's moving okay now. It's just getting stuff through the EU border sometimes can be a bit tough, but we're doing okay on that front now.
Thanks, Cillian. And just briefly before we finish up, last couple of minutes, I wanted to come to some of the other questions have been answered helpfully by Anne on the chat in relation to the funding from DIT to help people to take on training. You can make an inquiry to the Export Support Service. There's also the Internationalisation Fund, which covers consultancy and training as well, and that's administered, I think, by your local LEPs in England and through the devolved services in Ireland, Wales, and Scotland. And you know, Izzy asked a question about imports. This is about selling, but imports, of course, chambers can help you with importation as well. And often it's that the raw materials you import and how you incorporate them into finished products that will determine your ability to claim UK preference on the goods that you export. In terms of classifying preference for imports and using importers' knowledge, you know, the chambers can help, and where they can't, I mean, chambers, like any organisation, can point you to the guidance that's available. When you move from asking for guidance to asking for advisory services that need to be underpinned by professional indemnity, then there's a cost to that. And you know, the Export Support Service and the government can give you a degree of support. Whether that moves to advisory services, and when it flips over to that, I think you need to take the advice of an expert. And if you do that, there may be a cost. But as I say, the Internationalisation Fund does provide support for consultants as well. And your chambers, and Anna's on here from Thames Valley Chamber, they certainly offer advisory support as well as guidance for that too. I think we've probably got as far as we can on the Q&A. Let me just scroll through. Anything anyone else has spotted that they want to say something about for our presenters? We've got funding, contact a local chamber, Export Academy is available for rules of origin training. There's also I'll come to you, Steve, just in a second, just to say there is a link there to rules of origin guide on Chamber Customs website. It's completely free. It's there. It's available, and I'd encourage you to download that to get some more information. Steve, you're muted.
Yes. Oh, sorry. It's just a couple of quick points I just wanted to pick up on. That useful discussion or question about health certificates and DEFRA and what have you. It was just really to point out that in that circumstance there would be a different set of rules of origin. We're talking non-preferential rules of origin when sorting out those things, rather than preferential rules of origin. So it was just really to make sure that people are aware that if they're looking at health certificates, they may very well find that their product, and I would have thought, to be honest, in most instances, it would marry up, it would match up. But you can meet the non-preferential rules for your health certificates, but that does not necessarily mean that your goods are eligible for preference, because they may not meet the preferential rules. So you can bring them in, you can declare them as being of or export them as being either EU or UK origin, depending on where the goods go, and that would be correct. But it doesn't mean to say that you should be claiming preference on those goods. You would have to look at both sets of rules.
You would, and thanks for that, Steve. And Rain Wrighting, your question on tariff classification and change of tariff heading, and Raf Garcia, some explanation in regards to origin calculation procedure. Both of those questions, I'm absolutely certain Paul can pick up with you and help you to identify your local chamber that can help you as well. So we'll do that as we're hosting this. But also both those questions could go to the Export Support Service that's highlighted by Anne as well. But we'll circle back to both of you on that. It remains for me only to say thank you very much to Anne and our colleagues at DIT, to Paul, my colleague at BCC, to Steve Lamprell from HMRC, and the very insightful and informative Graeme and Cillian from Kerry Group, and for them to be for being willing to come and share their journey so far. Next, look out for the next webinar on this very same subject next week, when we'll hear from another export champion company and their experience coming at you, and I think and many more opportunities for Q&A. So thank you all for joining us. Thanks for sharing, and thanks to the presenters for presenting. Thank you very much, and enjoy the rest of your day. Goodbye.
Thank you. Bye.
Thanks all. Bye bye.
Bye bye. Thanks, folks.